Hey everyone, thanks again for tuning in. This week's episode is a little bit longer than usual. I'm chatting to Caroline de Silva from the FSCA. It comes in at about 20 minutes. I'd encourage you to watch the whole thing. She doesn't only discuss the task on the insurance apprentice, but really goes into some critical issues around COVID, the FSCA's response as things stand in the insurance industry at the moment. So please watch it till the end. And of course, we've also got Christelle giving away that 2,000 Rand social media prize on behalf of Elite Risk Acceptances. Stay tuned and keep watching. Caroline, welcome to our post-season social media show.
Thank you, Simon. Good to be here. It's good to talk to somebody.
Yeah, I know. I'm fortunate enough that Christelle is here with me, but I have had some, as my daughter says, DMCs. You know what a DMC is? It's a deep, meaningful conversation with Dot, who's our French bulldog. But she's fairly useless at conversation. Your episode on The Apprentice is it's touted as being kind of the toughest every season. And I'm never sure if it's because of the technical complexity or if it's just because it's at the FSCA's offices. And this year, I could see the look on the apprentices' faces when they walked into that courtroom. Do you want to just explain that room to the viewers, because it is very intimidating?
Yeah, so I wonder if it is intimidating for maybe both reasons. You know, the fact that it is technical and it is the FSCA. Although we try very hard not to be intimidating. But this year, I think The Apprentice was designed to be a bit more intense than previous years. I felt it the whole way through all the episodes I was watching. And this year we hosted it in what used to be our appeal court or our tribunal. The tribunal's now moved outside the FSCA, so the courtroom was empty. But that's the appeal court, which is manned by a whole set of high court judges. It has the effect of a real court, and it listens to appeals of any decision that the FSCA might have made or that the ombudsman, the phase ombudsman and the pensions fund adjudicator make. So it's a real appeal court with real weight and law. So it is a bit of an intimidating room.
So the task itself, I thought that the team did fairly well. I mean, considering they were almost in an unwinnable situation. You know, it was like they were coming to make representations, and it struck me as being clear that they, well, to put it bluntly, they were guilty of what they were being accused of. But then I found that, so Memory and Amor, they seem to have understood that they were there representing an insurance company. And Spamandla came out as a broker, if I remember correctly. Do you think that counted against him? I mean, because it seemed unlikely that scenario would actually happen that way.
Yeah, no, I don't think that counted against him, not for me anyway. I think what counted very much in Memory's favour is, you say, they were in a very difficult position. You never get debarred unless there's a weight of evidence against you. And in this case, it was a real schedule taken from the industry and given to them and said, this is not correct behaviour. I think why Memory did so well is she acknowledged that. She acknowledged that the behaviour was not good conduct, that it was unfair to customers. And I think in that acknowledgement was what put her ahead for me. I mean, whether they argued as an insurer or broker, it's neither here nor there for me.
What did you make?
Because one gives and one receives.
Yeah, absolutely. So it's ultimately the insurance company though that would face, or the key individual from the insurance company that would face the sanctions from the FSCA for contravening the regulations. Is that correct?
Partly. I mean, the binder regulations apply specifically to insurers in terms of their binder arrangements with their brokers. But the FACE Act will also make it a requirement that the broker can't receive unfair remuneration. So there are implications for both.
And would those processes run concurrently? Or, I mean, would you kind of deal with it all together, or is it two separate issues?
There'll be two separate cases. two separate cases, one against the insurer in terms of the binder regulations and a separate one against the broker for receipt of unfair remuneration and non-disclosure.
Can you just explain why was it important for you to, or why did you choose this material for this task?
Yeah, I think because, the binder regulations were a long time in negotiation, a long time in consultation with the industry to finally come to a position that manages conflict of interest in terms of paying higher fees to attract books of business. And that policy or practice is just not in the best interest of customer confidence in the sector, because it adds to the cost of premiums and might have a customer being placed with a company who pays better fees rather than what's good for the customer. And we introduced those binder fees, and what we didn't do was introduce caps on outsource fees, because companies can outsource their HR, they can outsource their IT, they can outsource their risk, whatever they may be. So we didn't cap outsource fees, we only kept binder fees paid to brokers. And we found that very many brokers started structuring their binder agreements as outsource agreements so they could avoid the caps. And we just wanted to get the message across that that's not the intention of these binder regs. Binder regs is to cap.
So yeah, so you're saying also that it should be impossible that an outsource fee is higher than what you would have been paying on the binder fees, because I mean you're performing less activities, aren't you? Or
exactly.
is it possible you could have a 8% outsource fee, but your binder fee when you were actually making decisions, paying claims, etc., is capped at 5%?
No, we don't think so. So we say if binder caps are 3.5% for enter, intervene, and renew, that includes administration. So how can you just pay 20% for administration if the enter, intervene, renew, including administration, is at 3.5%? You also get claims administration, but the claims binder would then also include the claims administration. So it doesn't make sense to us to see very, very high admin fees when they don't do any of the other functions. And that was the message we were trying to get across.
So just to be clear then, Caroline, I mean, those examples we gave the apprentices, as I said, it was fairly obvious that they had done what they were being accused of doing. And really, I think what we were looking for is that they came out with a bit of empathy and almost an admission that there'd been some kind of failing, and then we were doing whatever they could to fix it. But just to underline, so the repercussions for an insurer who is paying these high outsource fees, the key individuals could actually face debarment. That's not something we just put together for the show. Am I correct in saying that?
Yeah, so one of the consequences could be debarment. There are other consequences, though. We chose debarment for the show for, entertainment effect as well, I suppose. But I mean, the insurance company could be penalized, it could be issued a penalty, it could be required to remediate fees back to customers. So there could be many other consequences other than debarment. Debarment is just one of our penalties or options that we have, but It's a possibility.
Caroline, I mean, obviously the Apprentice is effectively over now. We're not sure when we're going to be able to announce the winner. Rionette and I chatted in the last interview, and she said she's still applying her mind to it, but it's probably going to be, I've doubted whether we're going to have events for the rest of 2020. Yeah. So, even post-lockdown, we'll probably have some blend of what we have now and true freedom. So we're probably going to end up doing this online in the next 6 to 8 weeks, announcing the winner, that is. But on the subject of lockdowns, obviously there's a lot of brokers and insurers, but mostly the brokers, particularly the ones that operate in the SME sector. They are themselves SMEs. They're sitting in lockdown. They're facing possibly 3 to 4, maybe longer months without earning any commission, because obviously for the insurer, it's admirable that they've been able to offer premium holidays and things like that. But where does the FSCA, where do you sit on this? What do you have to say to those brokers?
Yeah, so Simon, we should be issuing a communication today, both from the Prudential Authority and the FSCA on premium holidays. Obviously, we don't want to inculcate a culture of non-payment. But at the same time, we recognize that businesses and customers are in a very difficult circumstance at the moment because they've lost income, potentially will lose jobs, and will have a stressful period which we need to support in the interest of the entire South Africa and the economy. We also recognize that brokers, many of them are small businesses and may need the same support. Now, brokers, obviously, as small businesses, would also be entitled to apply to Solidarity Fund for support. But because we are allowing insurance companies to apply their minds to giving premium holidays to customers that deserve it or need it, we also recognize that we may be able to give the insurers discretion as to whether they can continue to pay commission where premium holidays or reduced premiums are granted in the life industry. And we have drafted an exemption that will allow insurers to continue to pay commissions even when they've granted premium holidays if they can afford to and if their solvency and liquidity support it, especially in the interest of small business. There's another point I want to make about that, Simon. So that's why we say it must be at the insurer's discretion, because it's really in the interest of supporting small businesses that suffer with cash flow. It doesn't necessarily mean that it should be applied across the board by all insurers in all circumstances. So to allow them to apply their minds to it. But there's another practice that I've seen that really concerns me, is that we've seen a practice by brokers and underwriters, not across the board, so it's not common, where they are offering premium holidays for the first month's premium to attract new customers. And we don't think that that's good either. So also one of the conditions of our exemption, it should only be granted to customers where the customer has a good standing with the insurer.
Right.
So it's to stop people attracting new business by giving premium holidays.
Using it as some sort of, what do you call it?
Inducement.
An inducement, yeah.
Inducement.
Premium holiday inducement.
The Last Apprentice. The Last Apprentice.
Yeah,
Wasn't The Last Apprentice?
That's a brand new thing.
Yeah.
A premium holiday inducement. Caroline, your views on the exclusions that's just suddenly hit the market post COVID, or right at the start of the issue, I guess. I know that there's also been a number of papers published on that. Can you just kind of talk about that a little?
Yeah, so we issued a communication right at the beginning of the COVID lockdown in terms of how we expect insurers to behave with regards to midterm changes, cancellations, exclusions, and so forth. Now, a lot of the policies, especially business interruption, may have had pandemic exclusions on them by virtue of the fact that reinsurers applied them. Some don't, some do. Midterm inclusion of a pandemic exclusion wouldn't be good conduct. And we have done a survey right now of the industry with regards to these kind of practices, especially on business interruption, contingency business insurance, credit guarantees, performance guarantees. Credit life is a big issue in the life market because the debt relief measures introduced compulsory or mandatory credit life that had lots of income protection on it to make sure that those policies comply with the regulations. So there's a lot of research and surveying going on at the moment to see exactly what the impact of all these claims will be on the sector from a stability and a solvency perspective, but also to ensure fair treatment of customers and not withdrawing cover unfairly.
I think, you've been great. I really appreciate you chatting. I feel like there's so much we could chat about. Maybe we should do a weekly check-in with Caroline on the FSCA approach to things. I think it would be very useful for the market, actually.
So I think what is good to share is that every single day at 12 o'clock, we have a four-way meeting with the South African Reserve Bank, the Prudential Authority, National Treasury, and the FSCA. And we basically discuss three major issues. One is the economic impact and how to alleviate it and support it and manage it. The second thing is any regulatory issues that need to be dealt with, either from giving regulatory relief or managing certain types of conduct. And you would have seen issues like the Reserve Bank reducing the repo rate. You would have seen solvency and liquidity relief given so that we can do more lending. All of those come out of those meetings. And then finally, what we also discuss is the ongoing economic impact on the industry and what lockdown will look like after lockdown. You know, what essential services can we introduce? How do we manage the health issues? So busy every single day issuing directives in terms of the Disaster Management Act as well as the financial legislation in an effort to support the industry to ensure it's sustainable after lockdown. And it's a big job. It's been a really busy time, and I think life will look very different after lockdown.
Caroline, we really appreciate the work that you're doing at the FSCA, and I really, again, on behalf of the Apprentice and of FA News and Rionet, thank you. Thanks for your support.
Thank you, and it's a privilege for us to be included and involved, so thank you very much for doing so every year. And I just want to say one more thing about the industry, is that it has inspired me the way the industry, the entire financial sector have just really come to the party to look for ways to support the economy, to support small businesses, to give back to South Africa and to their customers. It's been very impressive, and we'll do everything we can to support them to do so. Thank you so much, Simon.
Yeah.
So, Christelle, a full 7 days have passed, and since we announced that OZIM won the prize last week. And so who's this week's winner?
Okay, so actually last week we had a bit of a challenge because there was quite a tie between two people. We've got quite a few fans of the show, especially on social media. So this week, I'm very pleased to announce that our winner is Gail Lemon. Gail's been actively following the show, and she's been making amazing comments, again, social commentary, getting people involved, really helping us to build the hype and the brand around the show. So congratulations, Gail. You really are a deserving winner of the prize this week.
Fantastic. Thanks. And well done, Gail. We'll be getting in touch with you to make sure you get your prize. I think it's probably a good idea at this point to just mention that OZIM kind of disappeared off the radar for a few days after he won. So either he was enjoying his prize, or he's really not that interested in social media. He was just doing it for the money. And I would obviously encourage the winners to please stay engaged, because of course there is going to be that prize at the end for the most active. And we can kind of look back over this time. So please don't lose the impetus after you win the prize just because you can't win it in the following week. Christelle, thank you very much. Yeah.
Can we just maybe give OZIM, maybe he's just giving other people a bit of space to also.
Maybe he is. Yeah, OZIM.
He was very active.
I noticed he was active again last night. So perhaps he just kind of yeah. Christelle, I'll chat to you in another segment shortly. But thank you once again for sponsoring this episode, and well done to Gail for walking away with that 2,000 Rand prize. We'll chat to you next week.
Thank you.